Most beginners think Bitcoin is the ultimate way to get rich, but here's the truth. It can be a long-term investment strategy when used correctly. It's currently trading at 86,000, so now's an excellent time to buy. But you want to hold for a year or more so you can maximize profits. Bitcoin was trading at 123,000 just a few months back, so the upside there is there's a ton of upside over the long term. Bitcoin is a great thing to dollar cost average into, and should be considered for anyone's portfolio. It's now backed. It's more mainstream than it ever has been before, and investing in Bitcoin is a great long-term investment for more aggressive investors. If you're more conservative, you may have to determine your entry point and exit point. If you're on a fixed income or a senior citizen, you've got to really consider, how long can I invest? Because if we have a market downturn, you may have to hold Bitcoin for a couple years. So, you always have to be planning for the future. Bitcoin is actually a digital money on a decentralized network. There's a limited supply, 21 million coins. That's why scarcity drives value. Unlike stocks, it doesn't generate earnings, dividends, or cash flow. Let's take a quick look at the upside real quick. Bitcoin has historically outperformed most assets. Big returns are always possible in short periods. Adoption is growing, such as institutions, ETFs, and payment systems now use it more than ever, as we just discussed. Now let's take a quick look at some risk. The volatility. Prices can drop 30 to 50% in months, as we've seen just here recently. It's really, everyone has different risk tolerance, so you have to decide what's right for you and your particular personality. Governments could limit or regulate Bitcoin, so that's something that you always have to keep in mind. And unlike stocks and real estate, you're not going to have earnings. I'm going to take a quick look at how to include Bitcoin in your portfolio. If you want to allocate 5 to 10% of your total portfolio to Bitcoin, just starting out to see how it goes, and just continue to dollar cost average over time. That's an excellent long-term strategy. Always diversify, mix stocks, bonds, and real estate for stability. And always have a long-term mindset. Only invest money you don't need for the next 3 to 5 years. You never want to come from a position of need. That could be probably the worst outcome possible. If you need your money back in 6 months or so, that could actually work against you. So, remember, Bitcoin is an investment. Next, always use secure storage, hardware wallets, or reputable exchanges. Coinbase is recommended. We'll have a referral link in the comments below. So if you haven't used Coinbase, please use it. You can make $15 off the Learn and Earn. It's highly recommended. I use it and definitely recommend it. Also, now we're going to go over a few other things to remember. You always need to check your portfolio allocation to see where Bitcoin fits in to your overall strategy. Remember to learn secure storage methods for digital assets. Remember, rule number one is to always protect your principal. And always compare potential returns versus volatility of traditional assets before adding more Bitcoin. Always need to remember, the more volatile something is, the more potential it has to continue to go higher. It shows how popular something is, and really there's a direct correlation between volatility and basically seeing large gains. If you invest in, say a stock like that's held by institutions, such as a dividend stock or something, you're not going to see a whole lot of volatility there. But if you happen to own, say, Bitcoin, you're going to see, large price swings. As when the stock market gets hot, Bitcoin will also climb higher, and it will outperform the stock market as a whole. However, the reverse, the other scenario is it goes the other direction. Let's say our economy becomes stagnant. We have stagflation, and basically stocks start to stall or even drop. Bitcoin's going to be hit the hardest. We had tariffs, for example. Bitcoin fell by over 30%. And if you happen to invest in Bitcoin during when it dropped in price, you made a ton of money because it roared back to new all-time highs. And now we're basically seeing this pattern repeat. It's now fell back down to 86,000, and it's a great time to invest. If you're going to invest, always buy the dip, and you can sell it to all-time highs. Also, if you really want to own, you can own Bitcoin. It's always use Coinbase or other reputable platforms. That's really important. And we have to look at the overall trajectory of Bitcoin. You look at how Bitcoin is continuing to do exceptionally well when the market heats up. And over the past 5 years, it's been a great investment. And it's something that I believe in dollar cost averaging, but because of the volatility, when we see price drops such as 86,000, anytime it falls below 90,000 or so, it's probably a good time to invest more heavily, just because over a long term, we know Bitcoin's pattern. It's continued to do exceptionally well. When we have another rate cut, we should see the economy continue to do better. And we're right now in December, and if we have a Christmas rally, if it comes on time, or if it happens, if the next rally happens into January, if all these Bitcoin investors who are investing more cash into Bitcoin today, will definitely be seeing some nice rewards. So overall, we believe in buying Bitcoin for the long term and always buying the dip. If you have any questions or comments, please leave them in the comments below. We'll be more than happy to answer. Also, like I said, be sure to hit the like and subscribe, and we'll make another video next week.